Well, good afternoon then, folks. We are at the end of another week of trading on Friday the 19th of January. We'll flick across markets and we'll see what's up, what's down, why those things are up and why they are down. Economic calendar this week, though, relatively light in terms of big hitters. I mean, we did have some UK data out over the course of this week. You can see the unemployment rate from the UK on Tuesday morning, inflation Wednesday morning, and then retail sales earlier on today. Massive downside in retail sales, which is an interesting one, but unemployment rate remains firm at 4.2%, in line with previous, in line with consensus. Not too much to see there. So the labour market remaining fairly robust throughout the UK. Earnings or wage growth, should I say, are slightly down, but slightly more people in employment or in full-time employment. So, certainly not bad labour market data, and certainly not a reason where the Bank of England will go and cut interest rates anytime soon. They're one of the last remaining banks to say that they are not yet talking about interest rate cuts. Reason why they're doing that is because of inflation, which did tick higher over the month of December. You can see consensus 3.8, previous 3.9, actual beat both of them, and at 4%. You've also got the core CPI rate that came in at 5.1%, and the year-over-year, month-over-month figures for both readings, 3 out of the 4 of them came in and beat consensus, so higher than anticipated inflation pretty much across the board in terms of UK inflation on Wednesday. And that is not a reason for the BOE to go and mention rate cuts to the markets. Kind of is a situation where they say we need to keep the foot on the gas, isn't it? But then you look at retail sales this morning, which paints a slightly different picture. The lowest in 3 years. Consensus minus 0.5%, actual minus 3.2% retail sales in December. Obviously, no need me to tell you, Christmas is in December, so that is a pretty bad print from the UK this morning. And how often do you look for? I was sitting there with students last night on one of the webinars, and sitting there hoping, BOE, I wouldn't say hawkish, but less dovish than a number of the other central banks. Inflation beating consensus, higher than it needs to be. They still need to get that down. The labour market still remains strong. You got to sit there and you got to hope for retail sales to come in and beat consensus and give you some more of an indication towards them not turning more dovish. But then you get that sort of a print, and you hope for things to align on financial markets, and unfortunately sometimes when you want them, they don't quite do that. But that's the kind of situation you got to deal with. Apart from that, UK or US economic data, retail sales really the only thing out this week, bar Michigan consumer sentiment a little bit later on. But retail sales positive in the US economic data still remains all right, which is why you've had US dollar strength over the last while. You can see to begin the week, your Aussie, Kiwi, Euro and Sterling all aggressive downside, which is obviously upside in the dollar. You can see dollar Swiss, dollar CAD, dollar yen beginning the week, back end of last week and beginning of this week, or these moves are the beginning of this week. Big US dollar strength to begin the week. It has somewhat been pushed back on though. Equity markets have rallied towards the end of the week. US dollar has at least hovered or sold off a little bit across the rest of them. Bond yields, US bond yields continue higher, and this is not a situation that you see very often. US yields pushing higher, equity markets pushing higher, US dollar also pushing higher. Bond yields, equity markets and the currency all pushing higher in the same week. Not really something you see too often, is it? That's why the news flow gets a bit tricky sometimes. They kind of say, yields are higher, so, it's pressure on interest rates, so it's negative for stocks, and then the next day the correlation changes around and they're saying yields higher, stocks are higher, positivity for the economy going forward. And it's a little bit tricky to read into the news. Certainly the news this week has been extremely contradictory. You've got Reuters platform and on the trade floor and stuff, and I've got Reuters platform and all these articles, solid analysts, people who do this stuff for a living. One day they're saying this, the next day they're saying that. So now, especially when you're working off free sources, it's one thing getting that off a paid source. When you're getting off a free source, and one day they're saying this is up because of this, and the next day they're down because of something else, and it's like, what way do you really go about it to try to read into the news flow? How I would view it personally is, short term, the US dollar is definitely strong. Certainly recently, but ultimately at the end of the day, the next rate move from the Fed is going to be a cut. They're not going to hike interest rates again. So, you have a look at equity markets. All throughout this year, all equity markets have been talking about, or all people have been talking about, is how the Fed have been pushing back on interest rate cuts. We're not going to get these interest rate cuts, or the 1.5% the markets had priced in and had hoped for. We're not going to get that. The Fed have alluded to half of that. So then we begin to price interest rate cuts out. So a lot of negativity pushing back on interest rate cuts. You then get now by this point in time, you have a full or one full interest rate cut priced out, if that makes sense. And look what's happened to the S&P. This is the this is the rally through the back end of last year off the hopes that they were done interest rate hikes. Next, they're going to cut interest rates, and that was just one straight road. Over the course of November and December, rallied higher up to the highest. Now they're pushing back on that, and stocks have done nothing. You can see the S&P 500, the Dow Jones, the Nasdaq's up, going towards all-time highs, and just judging by the way the news has been coming in over the course of 2024 so far, you think stocks will be a lot lower than that, and they're not. And they have continued higher. So again, sort of reaffirms my bias that if you wake up every single morning of your life and go long stocks, you'll probably be okay. It doesn't really make sense, the correlation. I mean, it does make sense, but it doesn't make sense where the news flow is coming on. I mean, you can understand, yields and stocks both moving higher at the same time. It's how it's supposed to be historically, but in today's day and age, when everything's very interest rate sensitive, higher yields have been negative for stocks, and that relationship does kind of chop and change. Where it gets difficult is with the US dollar, but I'll try and work that out another time. We'll try and work it out next week and see what markets have to say for themselves. Oil has had a bit of downside to start the week, upside to start the week. I'm a bit unsure on oil. On one hand, you got Middle Eastern tensions, numerous different countries. I'm not going to go through all the different ones on this video. But on the flip side, you've then got China struggling. You got potential supply issues to up and coming later on this year. So you got bullish on one side, Middle Eastern tensions. You got bearish on one side for maybe a lack of demand going forward, and you got kind of the market not really sure what to do over the course of this year, and just has chopped sideways in a tight range. Started the week lower, has ended the week higher, but ultimately you are still trapped in that recent range. Now you're at the top of it. Every time we've been at the top of this range, I have tried to sell it back down. Gold, I don't know what do you do with gold. It's down, the yields are up, and now it's back up because there's a bit of weakness in the US dollar. Again, a bit all over the place. And I mean, some weeks you can work everything out perfectly and it can be a good week. Other weeks can be pretty difficult to figure things out. So no need to be right every week, no need to be right every day. This week for me has been a little bit troublesome to navigate, but maybe that was the same for some others, or I'd imagine maybe it was the same for some others. But that's it from this week. Next week we do have the Bank of Canada, the ECB, and the BOJ. So we will update further on that next week. But economic data not the driver of price action this week. There's different news flow, comments from officials, and pricing in and out of interest rate cuts. So brings us to the end of a pretty choppy, pretty difficult week of trade. Hopefully next week with our after central banks, we'll make a few more opportunities. Have a good weekend, recharge the batteries, and we'll be back next week for another week of trading. Thank you.